Last week, CMHC wrote in a report that about 17% of the condo market in Toronto and Vancouver are bought for investment purposes. Our next guest, who has invested about $1 billion in the Canadian condo market, says that that figure is too low. He says about 50% of condos in Toronto are bought for investment purposes. Let's find out a little bit more here. Brad Lamb, president of Lamb Development Corp., joins us now. Brad, good to have you with us today. And why don't we start with that figure? You do not agree with the CMHC, 70% bought for investment purposes.
Well, I think the problem with the CMHC's numbers is that they don't have any real way to get to the bottom of the numbers. You'd have to audit every developer's transactions to see really who the buyers are. And I've been doing this a long time in Toronto, about 20 some years, and the number is close to 50% that are investors. Now, many of these investors are local investors, they're Canadians.
Okay. Well, but talk to us about that's a massive discrepancy in terms of 17% versus your estimate of 50%. What does that mean to us in terms of the state of the condo market? Is that a good thing, a bad thing? How do we read if it's 50%? How does that play out?
Well, I think too much is made about that. I mean, the thing is, in Ontario, we haven't built any apartment buildings really in about 45 years. Well, if we're not building apartment buildings, if people can't afford to buy housing, and that's a big problem, where are they going to live? So the market that is picked up where the purpose-built housing market has left off is a condo market. So we build apartments that are 300 square feet to 700 square feet for young people to rent. And about half of those is the stock that's sold. And there's nothing risky about that. There's not a problem with that. It's no more of a problem than a big German pension fund coming in and building 20 apartment buildings across the country and then renting them. It's exactly the same thing. It's not a problem.
Well, I guess, though, when there seems to be such a lack of transparency and or a lack of data, it doesn't seem like it's a problem right now when we have these rates at record lows. But if you, as an investor, sit back and take a look at what happens if rates rise, then what's the story? What's the picture?
Well, I think it's the same question you ask: what happens when rates rise with commercial property owners or purpose-built apartment property owners or industrial property owners? The same thing. They decide what they're going to do. The suggestion that en masse people are going to panic and sell all their real estate doesn't make any sense. It's not happened in the past. Why would it happen now? It didn't happen in 2008 when we had a pretty severe recession in Canada for real estate.
But Brad, let me ask you this, just to go back for one moment. When you say it's no different for an individual to make an investment and to be an investor in real estate versus a pension fund, some people would say there's a huge difference because the pension funds do have a longer time frame. They can perhaps take money from elsewhere if in fact they have to shore up that investment. Whereas the individual, if they lose their job or the interest rates squeeze them out in terms of being able to pay for their mortgage, that's a very different story, is it not?
No, most investors are buying property that is self-sufficient. So whether they have a job or not, it's not really affecting whether they can afford the condo. They put, CMHC now forces people to put 20% down for an investment condo. And most investors put substantially more than 20% down. Because even if the CMHC says it's 20%, charter banks generally don't fund investors with just 20% down. So they have huge amounts of equity in this marketplace, far more than most apartment building owners would have. And we've not seen, in 2008, when like I said, we had a 9-month severe real estate recession, we didn't see anything happen with the inventory of condos going up in the way of investors panicking.
Brad, what's your view as it relates to foreign ownership in the condo market? It seems as though we don't have a great read of who actually owns these condos as well. Do you agree with that statement, and what does that mean?
I would say that developers know who their buyers are. I would say that anyone outside of that isn't sure who their buyers are. And so the question is a foreign buyer a problem? I think if foreign buyers were 50% of the marketplace, that would be a problem.
Why would that be a problem?
Well,
because I don't know that we really even know what that number is.
Well, I can assure you, doing this business and having a large amount of money at stake, it's nothing close to that. It would be well below, on average, 15%. Well below.
Okay.
But the thing is, most of these people that come to Canada and Toronto specifically, and even Vancouver to invest in, come from conflict zones. China's a conflict zone. It's very hard to do business in China and stay alive for a long period of time. So many people from China and from Pakistan and from Syria, not to lump them all in the same category, but they're all to some extent risky places to invest money. And the people that have made money in those places want to come to safe zones. And this is a safe zone. So why would you risk taking money out of a dangerous place to take it back to that place? This money's not going anywhere.
So you think it's sticky money, but Brad, when you step back, and I'm sure as a businessman and investing $1 billion in the condo market, what is the one risk that does resonate with you?
Well, the one risk that resonates with me would be economic recessions, right? And anyone in my industry has to protect themselves from the downside. And I think anyone who is a condominium investor should protect themselves from the downside. So, you know, if you're investing in the real estate marketplace, don't go too far. You always have to make sure you can protect your interests if things go sideways. And by the way, they will, right? I'm not saying that in X number of years we're not going to have a severe downturn. We probably will. And it's the job of a real estate developer, a real estate investor, banks, and everyone invested in this industry to be cautious.
Brad, we have to leave it there. Thank you so much for joining us.
Thank you.
Thank you. That was Brad Lamb, President of Lamb Development Corp.